Let's take a look at some charts, figures, and graphs on Litecoin for Brave New Coin. Litecoin is a Bitcoin fork, one of the earliest and oldest altcoins still widely traded. It is a proof of work coin with 4 times the eventual total circulating supply of BTC, as well as 4 times quicker block times than BTC. Over the past few years, since Charlie Lee sort of stepped down as the head dev or head guy in charge, there have been fewer updates on LTC than otherwise previously. Mainly they just merge the Bitcoin updates into Litecoin. But they are looking to add Mimblewimble and extension blocks, which is a type of sidechain, to Litecoin. Mimblewimble offers a privacy component. They've been working on this for at least a year, maybe a year and a half. At this point, they discovered a vulnerability, they being someone in the Grin community. For people who are aware of privacy-related stuff, Monero, Grin, ZK Snarks, Mimblewimble, they're all very much in the know, so it's hard to say who's a developer of what and when, just people who are interested in privacy and this sort of technology. But anyway, this vulnerability was discovered, announced, so they're still working on ways to mitigate against this by the looks of it. But full steam ahead on the Mimblewimble stuff eventually. I'm glad it's not coming to BTC. The issue I have with Mimblewimble and extension blocks is it's kind of a black box where consensus rules of the main chain could be broken and then essentially remerged with the main chain in an unknown way. So there is a risk there. I'm glad LTC is doing it first. I think this is definitely more risky than SegWit was. I don't think that's a controversial opinion. Litecoin's block times are 2.5 minutes by targeting. For the most part, they've held underneath that time. And as hash rate increases over the years, you will see block times under 2.5 minutes. Hash rate and difficulty has essentially held flat over the past few years, really since 2018. Not too much action going on there. Litecoin is merge mined with Doge. Both are script coins, meaning if you're mining Doge, you're mining LTC, or vice versa. And Doge obviously having quite a run, still making miners extremely rich per day for reasons unbeknownst to me. If I was a miner mining that stuff, I would be selling it the millisecond it gets into my hot little hand, because there's no way that Dogecoin is surviving a bear market. And if you see a bear market in Doge and LTC, you're going to see a dip in hash rate. This dip in hash rate was due to the Litecoin halvening, where the block reward got reduced. So nothing too exciting there on that front. Lightbringer has been probably the most non-direct, impactful on-chain event for Litecoin as a blockchain game. I haven't checked it out myself, but we see it show up on the on-chain stats, which is why I even knew that it happened. If we look at transaction counts in the line here, average transaction sizes in the fill, this is when the game first took off or started, September 2020. Massive spike in transaction counts. And ever since then, transaction counts have really remained quite high. Average transaction values still also relatively high, 8,000, 7,000 to 8,000 per transaction, or on average, which is high for something with microtransaction capabilities. This probably is due to the unconfirmed transaction count rising here. So all this stuff kind of goes hand in hand. If you have a rise in unconfirmed transactions, you tend to see fewer smaller transactions. If we just look at pending fees, it's still virtually nothing. So it's hard to explain away why this is happening on Litecoin. But historically, if we look back at transaction counts, this was when BTC was super congested and people were just using LTC as a spillway because they couldn't really send transactions on LTC or on BTC. And this time it's much different. This time it's truly LTC having this new use case in blockchain gaming, I guess. So certainly not turbo bearish, but I wouldn't say it's necessarily going to move the needle. It is good to see activity on LTC. If we look at block sizes, that's another thing that you can always look at to see how popular is the chain. And if we compare that to BTC, it's pretty much night and day as far as block size being used. You can see LTC is catching up with BTC. You can see the block size ceiling here on BTC in 2017, 2018. that getting raised here, and SegWit allowing for up to 4 megabyte blocks really. And even still, only a fraction of that is being used on LTC. Looking at NVT and active addresses, NVT in the line there, inverse metric of economic utility relative to price. This will fall if economic utility is steady or rising as market cap is falling. So it's bullish, right? But for me, NVT has never moved the needle on any single trade I've ever made. So I don't really know how to read this in a sense that it's going to impact your trading decisions. If this was an indicator that was impactful, you could say we are approaching a buy zone, or we are in the lower third of historic NVT. And we can look at this relative to price, and it doesn't, I don't know. It's just not for me. It doesn't really line up with price in the red there. It doesn't really line up with expectations as far as what you'd expect to see. You'd expect to see every single high on NVT sort of correlate with a high in price, as it would indicate overbought type of conditions. I don't know. I think it's pretty loose. That's why I prefer MVRV. If we look at active addresses, those are also relatively quite high at around 350,000, certainly down from the peak in October. Some of this was general altcoin season stuff. Some of this was blockchain gaming stuff, but it's still way above the sort of false high of January, when it was just the next best thing to send transactions. It wasn't exactly LTC having its own identity at that time, but here now very clearly, Bitcoin doesn't have Lightbringer, the game. MVRV is my preferred economic utility relative to price indicator. You can see highs in MVRV loosely correspond with highs in price. Lows in MVRV also correlate loosely with lows in price. MVRV is currently 1.06, so it's basically dead center. For LTC, anything above 2x multiple on MVRV is an overbought signal. Anything below 0.5 in general on anything is oversold. You can see LTC in 2015 got to 0.13 on MVRV. In 2018, it got to 0.3. In July, it got to 0.8. So what you're looking for here in a bear market is something between probably 0.7 and 0.4 to tell you, yeah, now's a good time to start stepping in. The hardest thing for me is to buy weakness in a bear market. So I need some metric to tell me that historically this is a decent spot, because otherwise you're just sort of catching knives and guessing and hoping. So it's either MVRV or it's 365 MA, something. This is definitely something that's good to use for that. Litecoin also has the Lightning Network. Not a lot of capacity here, not a lot of activity in general. I always look at this just in case, randomly this pops up, but it hasn't over the past couple of years since I've been watching it. Litecoin worldwide. Google Trends past year flat and down. I don't really see much about Litecoin, gotta be honest. I don't really see many people talking about it in my own bubble. And if we look past 5 years, this is probably down. Yeah, it's just flat essentially. Not a whole ton of a lot going on in that front. They do have a Grayscale trust. You can see here 236 million. This did have a significant premium over 200%. I think it was like 300% at one point in time. As the vesting and unlocks happen, that premium becomes a discount rather quickly, and it's likely to just stay somewhere around 20%. ETC rather at 43, BTC at 20%, Zcash also 20%. All right, let's move on to technicals. The part to me that matters the most, really, especially for altcoins. If we look at the 365 MA, the 5x multiple and the midline here, in order for me to be convinced that this is worth using, it has to make sense on backtesting. I guess you could say it loosely makes sense. It tells you the bear markets, it tells you the bull market peaks. It didn't really give you a great exit this year, although it did tell you midline was danger zone. So let's say we're in a bear market here for the next 6 months to a year. Doesn't mean this is the bottom right now. It just means now's a better time to buy than previously, and that may continue. So ideally you are, if you believe in LTC, this is an investment advice, but ideally you are dollar cost averaging the entire green time, and then you are selling in the overbought areas. If I'm backtesting, that makes sense. In LTC's case, I would start selling anytime it touches the midline in the future. But 154 is buy zone. Sell zone would be 550 currently. So if this shot up tomorrow, that'd be my target. definitely worth watching this into 2022. The 2-day cloud is bearish pretty distinctly, and I zoomed out on the 2-day because I like to see a clean trend up and down. Back in 2018, it was super clean. Then you had this white coffee and accumulation profile markup. And now we are in the grand scheme of things neutrality, but short-term trend metrics are definitely bearish. The 5200 EMAs are also crossed bearish on the daily. There's been a lot of congestion in this area. EMAs are certainly less valuable during sideways price action or congestive volatility. Times to pay attention to MA crosses are when it's the first cross in many months, as it was in 2018 to 2019, and as it was from late 2020 to early 2021. You know, this did give you the best exit, gave you a pretty poor exit, really, but it did tell you the sign of things to come, which was no longer are we as bullish as we were previously. Just like in 2018, no longer were we as bearish as we were previously. So right now, this is just, I wouldn't expect anything out of this price-wise. This was the halving August 2019. Not much has happened price-wise. You know, you wouldn't really know it. Supply reduction really only has an effect if there's demand, and there isn't really that much demand for LTC that I can really point to anyway. In a bear market, this probably does return sub 75 based on VPVR profiles. RSI doesn't really help you here, neither does volume. Volume's still relatively high on Coinbase historically. So somebody's trading this thing daily, which is hard to believe, but probably a bot or something, but certainly gets a decent amount of volume on Coinbase. Looking at LTC BTC on the weekly, on Poloniex has the most data going back to 2014. The best chance for this thing to break out was post falling wedge into edge to edge, mean reversion on the 200. All that was sort of set up perfectly, and I don't know if it hit it on a wick or not, but that trade is long gone. At this point, I would not touch this until all-time lows in RSI. I wouldn't touch this until it's mega doomer. You're hearing about it on Twitter. People are texting you, whatever it's going to take. But this needs emotion. This needs attention. It's otherwise floundering in a sea of nothingness and likely to just push all-time lows slowly, continuously, year over year, until you see some sort of capitulation or big move. And you'll see that on RSI. So it's really just a giant avoid for me, and really the same thing for LTC against ETH. This is the 2-day, so it's below anything that matters since 2019. Below cloud, below the 200 on the 2-day here. And this is likely to just continuously push all-time lows. I mean, sure, it'll have a mean reversion every now and again like it did in late 2020, but you're not really helping yourself holding this over BTC or ETH, because even during those mean reversion periods, you're only gaining ground that you lost for the past several months prior. So unless you are into taking risks that include losing significant downside, because this is unlikely to perform well against ETH, then this would also just be a massive avoid for me. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.